Good morning, everybody. Welcome to St. Patrick's Day. It's March 17th, Wednesday, and we just had that time change in the U.S. over the weekend, and I realize it's for some people, especially in some countries. I know in Asia they don't change the clock, so I'll just give people just about 10 or 15 more seconds to come in and get started. But what I'll be talking about today is effective order flow trading strategies. And I'll be honest, when Biden won the election, I thought the markets would sort of calm down a bit. I mean, with Trump, that was always a knock on Trump that everything is so chaotic. But these markets are have not disappointed from a trader standpoint. There's a lot of opportunities every day. So what I'll be talking about today, everybody, is strategies that you can take away and use in your trading. And I think the best way to trade is by using the order flow because basically order flow gets you as close to the market as possible, right? You want to know how the market is reacting to what's happening in the market, the current activity or the current buying, the current selling. And that's important, right? Because you don't want to be reacting to something that happened earlier or some sort of mathematical equation that could weight things that happened before a little bit heavier than what's happening now. You want to be based you're trading on what's happening right now in the market, right? That's going to give you basically the best advantage over other traders, right? That are using, indicators that may be lagging the market or analyzing things that happened in the past. It really has no weight on the future, okay? And order flow, I'm going to show you, allows you to gauge the tendency a market will continue in its direction, right? Anytime a market is trending, right, you always want to get on that trend, but eventually that trend is going to stop. You want to be looking for the signs, saying, imagine you're on the airplane, you're asleep, then all of a sudden, you hear on the speaker, good morning, everybody. We're making our final approach to, O'Hare Airport. Please fasten your seatbelts. And the same thing with the market, right? Market gives you clues that, the market's about to land, either stop its move up or, end its move down. And the new trading activity that comes into the market, which is the volume, depending on how that is trading in the market, is going to tell you if we're going to continue in that direction or if the market's going to be coming in and making its landing, so to speak. Okay. And lastly, the thing that is really useful about order flow is it gives you more information than basically everybody out there, right? You're not competing against the market. You're competing against other traders, right? So if you can see things in the data, right, in the trading that's happening that they're not paying attention to, or they just don't understand how to use that information, you're going to have an edge over them because at the end of the day, it's not you against the market, it's you against the other traders. How you can take the money out of their pocket and ideally put it into your pocket. And so today in this training, you're going to discover an easy way to use order flow in your trading. I'm going to explain what makes order flow so different and so much more effective than traditional market analysis. There's a big difference between reading the order flow and reading a traditional bar chart, right? A traditional bar chart is just based on open, high, low, close, right? But really what you want to do is you want to be looking inside each bars and see, why did the market open here? Why did it trade up here? Why did it trade down there? And then finally closed. And we'll show you strategies that traders are using right now in the markets. So again, why order flow is because it's based on what's happening right now in the market, right? You trade based on the present, not the past. Right? It's going to give you better vision of what's going on, right? Imagine you're in a sports analogy, you're playing football, soccer, right? You're watching how the other team is lining up, how they're reacting. In the same way with trading, right? When you're trading, you're watching how the market develops, right? Changes that are happening in the market and how you could use those to your advantage. Because at the end of the day, you have to trade what's happening right now. Now, my gift to you is a free copy of my book, Trading Order Flow. Now, you're not going to get a hardcover copy like this. You'll get the information on how to download it, and you can put it on your phone, your computer, print it up. It's a 150-page book that I wrote after I left JP Morgan, and this was sort of originally supposed to be my contribution to the trading world. And I'm going to show you how to get it for free. Okay. So for those of you that are new to one of my presentations, who I am. My name is Michael Valtos. I've got over 25 years professional trading experience. I started on the CME trading floor, okay? And then I left the trading floor when electronic trading started happening, right? This was back in the early 90s, and Globex at the time was really starting to pick up, okay? But nowhere near what it is today. It was, S&Ps at that time, the big S&Ps were still trading. It would trade, if it was a very busy day in the night session, it traded maybe 4,000, 5,000 contracts, right? And, currencies, if you traded 1,000 Deutschmarks. They didn't have the euro started up later, but at that time, it was still a Deutschmark, Swiss francs. Those contracts would trade 600, 700 contracts a night. So I started, when it was very quiet, and I saw the evolution, but I realized that was the shift in the markets, right? Everything was going to go electronic, and so I wanted to position myself for the future. So after spending about 3 years at Dean Witter, I joined EDF Man in Chicago, the big English trading company, right? It's been around since the 1700s, and they trade all sorts of commodities. They trade, it's like the equivalent of what Cargill is in the U.S., right? I also worked for Cargill for about 4 years. I was even transferred out to Singapore to set up a trading desk for Cargill. After Man, I joined Commerzbank in Chicago as their Eurex trader, right? I was trading Bunds, Bobbles, Schatz, DAX, Eurostock stocks, right? And I would trade that against the U.S. products. So Eurex at the time was really the first big European exchange that was all electronic. Okay, this was back in the late 90s, and you know, I even then, right, I noticed the shifts in what was happening in the markets. Everything, once an exchange said we're going electronic, it happened probably, lots of times it just happened within months. Okay, and that's why after Commerzbank, after 9/11, I took about 6 months off, traveled around the world, sort of come back to reality, and then I joined Cargill in Chicago on their futures trading desk. And when the exchange in Singapore said, we're shutting down our trading floor, that's when Cargill sent me out to Singapore to set up a off the floor trading desk. Okay, then I spent about a year and a half in Singapore with Cargill. And then after Cargill, I joined JP Morgan. I was at JP Morgan for 8 years in Singapore. I was vice president of futures trading. We're on the desk trading, not, a vice president where you're just sitting in an office looking at numbers or spreadsheets, writing emails, on the desk, banging away day in, day out for 8 years. And finally I said, what, I have it. I can't take it anymore. I had gotten married. I had my first child. So I know how to trade. I could I could just walk away. I was in my early 40s. I said, you know what? I've had enough. I'm gonna trade for myself. I could write my book, and just live life. Okay. And that's how the order flow company started, right? Is after leaving JP Morgan, I wanted to do something different, right? A different direction. Honestly, I didn't expect myself to get into software. Okay. But the software that I was using at the time, it was just wasn't good enough or complete enough. I don't want to say good enough. It was basic, basically. I mean, this is in 2013, 2014, and the software out there for reading order flow would give you delta, point of control, and imbalances, which I'll talk about in a minute. But I realize I have my way of analyzing the market using delta, point of control, and imbalances. So let the computer show me that, sort of take off some of that heavy lifting from my shoulders, doing the analysis, calculating it by hand or, in my head on a calculator. I said, take that analysis, put it in a computer. And that's why I created the order flows trader. Now, originally I created it just for my own use, but in my conversations with other traders, they said, hey, Mike, how can I buy that? I'm like, this is something we just developed for myself. And once we saw my programmer says, hey, I'm getting a lot of people interested in this, because I'd be sending emails to other traders. We'd be talking amongst each other order flow traders saying, hey, you know what, this looks good. I could use this in my trading. That's how order flows trader came about, right? The commercial aspect of it. It started as my own personal software, that I was using, and it sort of blossomed into, once everyone saw it and they said, hey, you know what, this can help my trading. I want to use it. Sell it to me basically. And the charts and tools that I use in this training are generated from my order flow software. That's why I sort of give you that background on the software, is because what I'm showing you while using my software can make it very easy. You can also apply what you're learning, if you're using another company's software, right? Problem is people get into order flow and they're taught about delta, point of control, and imbalance, but they're not really taught how to use them in their analysis. They're taught, what they are, which is good. You should know what they are, but you have to know how to use it. Okay. And, um, give you an example, right? You all go out and, now everybody's got, the latest iPhone, or, at least an iPhone 8 or something. My wife's got the 12. I'm still on the 8 Plus, but there's so many features, right? I don't even know how to use them all, right? And but the same thing is like that when you're in order flow, right? There's a lot of data points, but if you don't know how to use it, it's kind of useless, right? It's just like buying a camera, right? Those big fancy Canon DSLR cameras that have all these, f-stops, everything that you want to use as a photographer. But if you don't know how to use it, you just put it in automatic mode, and you just spent $1,200 on a camera that you're really not getting the most out of. And it's the same way with order flow. If you don't know how to take that information that you're looking at, it's really not going to be very useful to you. Okay, so that's my goal today, is to show you how you can easily see things in the order flow and apply it to your trading. Now, just before we sort of dive in, a brief disclaimer, understand that trading is risky, right? You should only, risk capital is money that can be lost without jeopardizing your financial security or lifestyle, right? Basically, don't trade with your rent money, your mortgage money, your kids' food money, basically. Um, and realize, it's not a race against time. A lot of people say, oh, you know what, Mike, I got 3 months of, I just lost my job. I got 3 months of pay coming to me, severance. I need to learn how to trade so I don't have to get another job. Well, you're putting all that undue pressure on yourself. That's not a good situation. I could teach you how to trade, but at the end of the day, trying to put all that weight on your shoulders, isn't the best scenario. But the thing is, with trading, it's a skill that you could take with you everywhere, right? Whether after you retire, after you get out of school, if you want to quit your job, learn how to trade, and it's a skill you could take with you forever. So again, why are you here? It's because you want to discover an easy way to use order flow in your trading. You want to see what makes order flow so different and more effective than traditional market analysis. And you want to learn strategies that traders are using right now in the market. Now, for a lot of people, they tell you, well, order flow is about reading the time and sales or reading the depth of market, right? The price ladder. But honestly, trying to make sense of the time and sales, you can't. It moves too fast for most people. I'll say most people, pretty much everybody, it just moves too fast. And there's a lot of small trades that really confuse you. And trying to read the depth of market, the market conditions for the last several years has been very chaotic, that trying to read a dome and get anything meaningful out of it is not practical. If you're trading a slower market, wheat, some of the grains, yeah, the dome is incredibly helpful. But honestly, trying to read a dome in the Nasdaq or micro Nasdaq, forget about it. It's just jumping around too fast for you. So everything that you see on a bar chart comes from time and sales, right? If you ever looked at a bar chart, you wonder, some people probably don't, but all that information that you see comes from the time and sales. It gives you a lot of information, right? That's why people say, well, you should look at time and sales, because you can see where the aggressive traders are coming in and hitting the bid, when a market changed from bid to offer and so on. But the problem is it just moves too fast, right? Everything that you see on this time and sales here, that's all within the same second. So you imagine, you know, you're really breaking things down to nanoseconds if you're trying to read time and sales, and you just can't, right? It just moves too fast. But if you take that information and you put it in a footprint chart, it gives you more information that you can use, right? You can see the delta, the point of control, the imbalances. Now, again, that's sort of the gateway into understanding order flow, is delta, point of control, and imbalances. And once you understand those 3 points, it's going to give you a lot more ways of looking at the market, taking it apart, and understanding what's happening in the market. So delta is the difference between aggressive buying and aggressive selling. Now, I know some people like to argue that, oh, a market went up because there's more buyers than sellers. Well, no, the market went up because there's more aggressive buyers than aggressive sellers, right? Because what is an aggressive buyer and aggressive seller? Now, in the US, right, because of low interest rates, because of work from home from anywhere, because of a lot of the stuff happening in the big cities last year with um, looting and all that stuff, there's been a big migration out to the suburbs. So now it's a seller's market to sell your home. So perfect example, right? If you look for a home in, outside of Chicago in the suburbs, a home hits the market, right? $500,000. Now, the seller lists his house at a $500,000. The buyer now has to become aggressive because property market is rising. So he just lifts the offer. I'll pay $500,000 for this house. The buyer was aggressive. The seller was passive, right? And so say that person buys that house and the next house comes up, oh, this house just sold for 500,000. I could sell mine for 510. He lists his house at 510. Someone buys that, right? So you have more aggressive buyers than people coming in and lowering the price of their house. If the seller comes in and lowers the price of his house, he is being the aggressive seller, right? Because he will go down. Say the buyer says, I like your $500,000 house, but I only think it's worth 480. So he bids 480, and the seller has to think, well, oh, my neighbor wants to sell his house. He's also going to be selling it at 500. I got a buyer here at 480. Maybe, I just want to unload my house before this buyer sees my neighbor's house come up for sale for 500,000 and buys his instead. So he knows he has a bid at 480, but he's offering it at 500. He goes down and says, fine, I'll sell it to you at 480. Now the seller has become the aggressor, right? He is aggressively selling his house to that bidder. Okay, so that delta measures the difference between the aggressive buying and the aggressive selling. So like right now in the housing markets, if I were to measure the delta, I would say it's positive, whatever, because you have a lot of aggressive buyers lifting the offer, even paying in some cases cash over the price of the house. All right, and so it's a very aggressive market in terms of buyers. I mean, there's a limited supply of houses. That's why the price is going up. Now, point of control is the price level in the bar with the most volume. And that's important because in a bar, the level where everybody is happy to trade at is sort of the balance area of the bar, where most of the volume is occurring. And, people like to say, well, volume doesn't really matter, right? Because obviously for every buyer, there's a seller. But if you've ever run a business, whether selling things on eBay or, an actual brick and mortar store, you understand that volume helps you determine your pricing, right? Because if you're raising your price but you're selling less, you're going to be making less money. So you're going to be lowering your price, right? You want to find that sweet spot where you can sell the most of your supply at a fair price. And think of it in the market, right? You have buyers and sellers, people that have supply and people that want to buy that supply. So there's that equilibrium. There's sort of that fine sweet spot that the market will find, over if you're looking at a 1 minute bar, over that 60 seconds, if you're looking at a 5 minute, over that 5 minute period, 15 minute, there's always going to be that sweet spot where everyone is sort of happy to transact, right? And that's what the market really exists for, is for people to transact, either to buy the supply, sell their supply, or transfer risk, at a level that's fine. Like go out, you need to buy insurance, right? You can just go ask one agent, right? And he'll say, okay, yeah, you want life insurance for whatever, $1 million in policy. This is what it'll cost you. But if you're smart, sometimes you go out and you look at 3 or 4 different quotes, right? And you're going to find the one that is makes more sense to you price wise, right? So, you could have one guy price in your insurance policy at $350 a month, but then everybody else comes in at, 250. Okay, so the market is really valued at 250, not necessarily 350. Now, imbalances is the areas, the price levels rather, where aggressive buyers outnumber aggressive sellers by a particular ratio. Usually it's 4 to 1 or more. And the way to think of this is, you know, you're looking at sort of the balance in the market. Okay, so imagine like me, I've got three kids. Okay, so I'm an adult. I've got three kids, 4, 6, and 8. And if I play tug of war with them, it's three against one. But maybe me against two, I might lose. But when you start adding in a third, then the mom joins in and it's 4-1 against me, I'll probably lose. And that's how imbalances are. So when you have, aggressive buyers, people lifting the offer versus people hitting the bid, outnumbering each other, right? And aggressive sellers would be, you've got, say, 10 sellers versus one buyer, right? So the market is 6 bid at 7, but you have 10 people buying it at 7 versus one person selling it at 6. You would consider that a buying imbalance, right? Because there's only one seller at 6, but you have 10 buyers at 7, right? You have more people aggressively buying than aggressively selling. So remember, right? All the information you see on your chart comes from what's traded in the market, from what you see in the time and sales. Now, but a candlestick chart, it leaves out the most important part of data that's available to the trader, the volume, okay? And that's important. And the reason, as a trader, you want to have as much information as possible, right? Now people will say, well, what about information overload? Well, yeah, you have a lot of information. You have to know how to use it. Okay, you have to understand what you're looking at, and I'm going to get that in a second. But you know, you see the market all the time, right? Market's moving, it trades back to a particular level, and then it just takes off, right? This is yesterday in the gold, right? We're sort of moving up, we pull back, go back up, pull back, right at this level, literally right to this level. Well, why, right? Maybe there's something you could understand. People say, well, yeah, you have a double bottom here. Okay, as they'll say that as you hit this bottom and then you're breaking out to the upside. But as a trader, right? If you can see that, hey, you know what? I have a double bottom forming as it's forming and understand why it's forming, you're going to be way ahead by getting long in here than the people that are buying this breakout up here, right? That's a full dollar in the gold, 10 ticks before everybody realizes, hey, you know what? We got a double bottom here, okay? And that's where something like the point of control is going to help you, right? And I mentioned, point of control is the price level in a bar with the most volume. Now, every bar is going to have a point of control. Oftentimes, it's going to be somewhere in the middle of the bar or towards the middle of the bar, but there are times when certain points of control matter. This is that area right down here, this double bottom right here, the two green candles that follow the big red candle down, okay? And if you understand how to use point of control, that's going to put you ahead of everybody else that's waiting for the breakout to happen to say this is a double bottom, because you can confirm this double bottom pretty quick, right? As this bar is forming, as this bar closes, you can be getting long immediately in the next bar rather than waiting for so many bars to happen and you're breaking out of this high, because now you're anticipating that, hey, you know what? I have a double bottom forming here, and you could position yourself to take advantage of it. So in order flow, like I said, every bar has a point of control, but not every bar matters. Now, the order flows trader software will highlight to you the points of control that matter, right? It'll print it, color it a different color. Right? Every point of control will normally be gray color, but software, you could have software that's going to highlight it a different color. So you could just see, oh, you know what? I've got a point of control that matters. We call these prominent points of control, right? If they're blue, that's going to be support. If it's magenta color, which is like a purple almost, it will offer potential resistance. So I know why this market came back here, because I hear I've got point of control right on the bottom of this bar. That's a bullish sign in the market. And then we come back to that level, we test that exact level, that prominent point of control that I had earlier. And the point of control this time is one tick up um, off that low, but it's also a prominent point of control. So it's telling me that, hey, you know what? These points of control matter. There was something interesting in the volume, right? That is telling you that, hey, you know what? You have support here. So I know I've got support as it's forming rather than waiting for this market to break out. I know already, yeah, the order flow is telling me there's some good buying, passive buying happening down here. And like I said, if you're using just any old software, the footprint chart, whether it's Sierra charts or the NinjaTrader version of order flow, or there's a lot of other software out there. I can't name them all, but wouldn't it be easier if you had software that would highlight things that matter, like right, like the points of control? Because like I said, every bar has a point of control, right? But not every point of control is going to matter. So if you're doing it on your own, you can sort of figure it out. You'd have to look at a lot of charts to understand what's going on. But if you have software that's going to highlight it to you, it's just going to put you ahead of everybody. Okay, now here, this is mini NASDAQ. Okay, this is yesterday again, right? Similar, right? I showed you the gold chart earlier. But if you're looking down here, this is actually last night, about 8:30 last night. You're just sort of going sideways in here, okay? And then the market rallies, right? It rallies up from, the 14, 15, 16 area all the way up into the 30s, okay? But if you're looking at the order flow, you can start to see, you know what, I've got some prominent points of control in here, right? But you have to know what to look for to see a prominent point of control, right? Right here, this blue point of control is telling you that it's prominent. It's an area that we had been going sideways. Now we're really starting to build up the volume in here, right? So that's why understanding where prominent points of control come in is going to put you ahead of everybody. Because if you're just going sideways in here, right, just sideways, you're wondering, well, maybe we're consolidating and then we'll fall off, or maybe if we start rallying, where are you going to be looking to buy? Because people like to try and buy a breakout, but we're sort of just sold off. If you're buying it here after a strong sell-off, sometimes it's not the most prudent move out there. But if you can see something in the order flow, it tells you, hey, you know what? There's some volume in here. Pay attention to it. You're willing to take that risk, right? You're willing to get long around the 13, 14 area with a stop just below this volume at 06, right? So imagine you're getting in here, all right? You're getting in, after this bar closes somewhere around 13, 14 with a stop around 6, 5 or 6. What is that? That's, 8 points. And then what? 12, you get in 12, 13, it rallies all the way up into the 30s. So you're risking 7, 8 points for, 25, basically 25. Even if you just get out up here at 24, you've doubled your money, right? You got in at 12 or 13, you're out at 23, 24. That's 10 ticks. You've only risked 7 ticks. Okay, if you held it longer, better. If you held it a little bit longer, even better. So that's where using the order flow is going to give you that sort of that head start over everybody else, because at a minimum they're waiting for this breakout up here at 17, but you could be getting in here around 12, 13, 14 ahead of everybody. See, this point of control matters, right? I said you have a lot of points of control. Every bar has a point of control, but not everyone matters. Okay, say, well, points of control are going higher. Okay, 1, 2, 3, 4 points of control higher. Well, isn't that bullish, right? The market's going up. Yeah, the market is going up, but at some point, markets don't go up indefinitely. At some point, things are going to start to change. And if you have something that's going to highlight to you that that things are going to change, it's just going to put you ahead of everybody else out there, right? Rather than, oh, I know things have changed here, sort of at this high, the swing high, rather than let it come off, and then you start, breaking down, and then you're getting short down here at 42, 42 and a half, 43. Where would you rather be short from? Up here around the 44, 44 and a half area, or 42, 42 and a half? You want those clues to happen as soon as possible. So taking it sort of the next step, okay, point of control, right? Point of control is volume. right? It's the point in the bar with the most volume. Now, in a new version of Order Flows Trader, the version we released back in October, we've gone through, this is the third version since 2015. We're upgrading our software with new tools for traders. One of the things that we added was the bar value. Now, most people understand the value areas because they've done analysis or they've done reading and research on market profiles, so they understand sort of the value area, right? And that's the area in the profile where about 70%, some people use 68% of the volume occurs in the day's trading. But you could take it a step further, right? You could do it on a bar by bar basis, sort of the area of the bar where 70% of the volume traded. Now you could adjust it, right? So you want to look at, I just want to see the area where 50% of the volume traded, or even 33%. You can adjust that, but the standard is 70%. And when you start looking at the value as well as points of control and other things that I'll get to in a little bit later, you really start to break down the market and understand what's happening, right? So here's a market that had been going up, right? This bigger gray area, right? The darker gray is the point of control, but this bigger gray area is the value. So you have a value area high and a value area low, obviously the point of control of the bar. But as you see these bars going up, right, you're seeing value basically moving higher, value areas going up, up, up. But then you see all of a sudden everything just changes in this bar right here, right? You want to understand, as a trader, you want to get in on the turn as quickly as possible. Now we started going down, you can see now the value is going down, right? You even have a gap in the value area between this bar and this bar, right? And you even got a gap down here between this bar and this bar. But what about the value? Is there value, is there value in the value area, so to speak? Well, yes, there is, because there's times that the value area is expanding sort of in the opposite direction to what had just happened, right? Imagine we just have this nice move up, right? Value area is going up for the most part. You do pull back a little bit, then it corrects and keeps going back up. But what if there was a way that you can easily see that, hey, you know what? The value in the bar has changed, right? It's telling me something bearish, right? I do have a bearish prominent point of control, okay? But what else what else can I use rather than just the point of control? You could use the value area, right? So imagine here you have the market moving up and it turned right in this bar. Now we're starting to see bearish point of control. We're starting to see bearish value area. Was what happened? Value area opened up above the previous value area and closed well below it, right? It's almost an engulfing value area, so to speak, right? But it's a shift in the value area. Obviously, the bar is heading down. Next bar opens up inside that value area, immediately trades away from it. That's also bearish, right? So when you understand value and how it's happening in the market, you can start to see things changing in the market that other people aren't. Okay, this is just your normal footprint chart. Okay, it just looks okay. Yeah, I can see points of control go. Market sort of grinding its way higher, right? Sort of going sideways down here, come up a little bit, go sideways some more, go up a little bit, and then finally get that pop. But if you're looking at value, you could see here, right? You're in this sideways activity. Value area is telling you, hey, you know what? We're expanding, right? Value is getting bigger. And as value expands, right, the market is starting to look for sort of a different balance area, a new balance area. So you can see, right, just going sideways, now we start expanding. Okay, we find our new balance area. Then again, you see the bullish expanding, the bullish EVA, we call them. We call them EVAs. So you can see here, right, it's also bullish. So you got one down here, one over here, and the market goes up. But this was the clue, right? If you're just looking at a normal footprint chart here, you'd sort of say, well, yeah, I can sort of see it, sort of moving up here, right? We're sort of going sideways in the points of control. We got some positive delta, and okay, you're probably willing to get long somewhere around the 41. But if you're looking at the value areas, you can have noticed earlier here, you can be getting long at 39, 39 and a half, even 40, rather than waiting all the way up here to 41 to really feel confident, because now you're seeing the value areas starting to expand. So that's on a 1 minute chart, right? But about other chart types, this is a 5 minute chart. I use mostly E-minis because that's the market most people trade. But again, I'm going to show you other markets as well. Um, and I show minute-based charts. Sometimes I show range-based charts, volume-based charts. But again, it's not like you got to have 20 different charts open. The same things you would look for, whether it's a minute-based chart or range-based chart or volume-based chart, it applies, right? All those different types of chart types. So here, this is yesterday, right? We sold off, if you remember, around 11:30 down to around the 52 area, and then we rallied. Okay, but what is that? People say, well, you got a pin bar here, et cetera. I love these guys that live and die by pin bars, because when they work, they're like, oh yeah, look at me, I'm a genius. But they fail as often as they work, if not more. But if you start adding value, right, you can see that on the sell-off here, you got a bearish EVA here, right, at the 63 area, right? You're selling off, going sideways. It's just sitting in here. Then boom, you're seeing the value area get strong negative, right? And then you sell off. You get down here, yeah, you have your pin bar down to 53. So imagine getting short somewhere in here, 61, 62. You get a move, $10 move down to the 50s, 52, 53. Then you start coming back up. Now, you could also use, for a lot of people, back in the days when there were trading pits, right? The markets would open and close, and then nothing would happen until the next day. So there was a lot of analysis with gaps, gap analysis theory. And people still trade gaps in things like stocks. But, if you trade Forex, if you trade crypto, if you trade, obviously, futures, you don't see much gaps, right? Especially because the markets trade basically continuously. But when you start looking at value, right, you can see gaps in the value, right? So here, right, this market's coming down, 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 and then it starts reversing. As you're starting to go up, right, you have a gap here between this green bar and this green bar in the value. If you're just looking at where bars open and close, you're not going to see gaps. But when you're looking at value, you start to see gaps, and that just opens up a whole other form of analysis for you, is that gap analysis, because things are important, right? There's so much analysis that can be done with value that it just really is quite amazing. We're just sort of scratching the surface on it, because nobody's really ever thought about it, looking at it on a bar by bar basis. But imagine this red candle right here. Okay, what happened? Okay, well, let me stick with this green candle here. So you're coming down, selling off, okay, and at this time, early in this bar, the value area is obviously below the value area of the previous bar, and early in this bar, it's a big red candle down, so the value is lower, right? There's a gap because we never went in and even into the previous value area. But the bar turned around, turned green, closed, next bar open. So you have your value area high here at 39.55 and a quarter, right? The next bar opens in the value, trades in that value, right? It comes literally almost to the value area low, and then it rallies back up, okay? And also that tells you something. But this bar forms, the value area here is higher than the value area here, right? And that's important. This one, I'm not really using this in my analysis, because yeah, we gapped down, but it was a green candle. So now I'd be thinking in my head, where's the market going to gap up, right? Or is it going to gap up? Okay. You see the gap up here, right? That tells you value is moving higher, right? And that's important. Now, another form of analysis is when you open up outside of the previous bar's value, right? Do you trade all the way through it? Do you trade into it? And if you understand market profile, you understand that if you open above value and you start trading into value, there's a chance you could get all the way through that value and continue in that direction. As you see here, right? We opened above previous bar's value area, traded into it, accepted it, got all the way through to the other side, and just pushed much lower. So there's all sorts of analysis you can do with value areas. So hopefully by now you can start to understand how it becomes easier to trade order flow when your software helps you do analysis, right? So how much easier do you think your trading will become when you add in order flow analysis to it, right? We tend to make trading and things in general more complicated than it really needs to be. So the next thing I'll talk about is imbalances, right? And I've mentioned earlier what an imbalance is. And when you have more than one imbalance in a bar, you really got to start paying attention. Now, most traders are familiar with stacked imbalances, right? People always talked about stacked imbalances for a long time in the order flow, right? And what stacked imbalances here? You have three imbalances stacked nice and neatly on top of each other, right? 8 against 72, 11 against 123, 83 against 384. Okay, that's nice, right? Then the market, sort of trading right or rotating around that aggressive selling before it finally sold off. Now this is a selling imbalances. Obviously 8 against 72, it's about 9 to 1. 11 against 123, that's about 10 to 1. 83 against 384, that's about 4 to 1. So depending on the imbalances that you're using, the ratio, whether it's 4 to 1, 5 to 1, 3 to 1, is going to tell you if there's an imbalance at a particular price level. Just like this green bar, you have two buying imbalances. You got 0 against 203, you got 11 against 435. If it's a blue number in the order flow, that's a buying imbalance. If it's a red number, that's a selling imbalance. And oftentimes bars either have a buying or selling imbalance at some point, right? But when you start to see a bunch of them, that's when you got to really be paying attention, because it's telling you traders are getting aggressive right now, right? So here's a stacked buying imbalance, okay? Market has just been going sideways. You start to see a little bit of selling. You got a selling imbalance here, one here, two here. But then it came back with a stacked buying imbalance, right? 1 against 39, 9 against 42, 52 against 371. And then it took off to the upside, right? Because as you're going sideways, you had some aggressive selling, but then it came right back with that aggressive buying that sort of kicked off this rally, right? So knowing where this aggressive buying and aggressive selling is coming in at more than just one level is going to be important. Now, while stacked imbalances are nice, there's also bars that have multiple imbalances that aren't neatly stacked on top of each other. Are they not important, right? Yeah, it's very easy to see optically a stacked buying imbalance, right? Or a stacked selling imbalance. But there's going to be bars where they're not neatly stacked on top of each other, right? The market isn't always um, neat, right? It's messy at times, but that doesn't mean that a bar that has many buying imbalances isn't as important as a bar that has a stacked buying imbalance, right? And again, this morning in the E-minis, right here, right? We hit this low. This is about 8:40, 10 minutes after the cash open. Came down to 39.30 and a quarter, going sideways. But then you're starting to see a bar with three imbalances, one, two, three. Okay. Now, is that important or not important? Well, to me, I found it's very important. And it's followed up by another bar with three buying imbalances, one, two, three, right? So imagine you're at your low of the day and you're starting to see the aggressive buyers wake up and come into the market, right? So if you're looking for stacked buying imbalances, you don't see a stacked buying imbalance here because they're sort of spread out. Here, you don't see a stacked buying imbalance because they're spread out, right? You got 24 against 102, that's the imbalance. 50 against 80, that's not a buying imbalance. 1 against 48, that's imbalance. 1 against 166, it's also a buying imbalance, right? So even in here, you've got three imbalances, but down here, you have also three imbalances. If you're just looking for stacked imbalances, you're going to miss this trade, right? And again, it went up from 32, 33, all the way up to 40, right? Before you ran into a bearish prominent point of control. Even on this side here, you got a stack selling imbalance. This is a 5-minute chart, okay? And again, your market's coming down. You're seeing some selling imbalances in here. 1, 2, 3, 4, 5, 6 imbalances there. 1, 2, 3, 4 imbalances here. But the market's selling off. That's what you're expecting to see. But then we hit a low. The market starts turning around. one, two, three buying imbalances, one, two, three buying imbalances. Okay. But if you know that you want to look for them, yeah, you can see them. But again, have software that's going to highlight it to you. Our software puts a nice box around it. Now, you'll say we have selling imbalances here when you're talking about that. Well, yeah, we're selling off, we're selling into the lows. That's what you're expecting to see. But as you hit the low and you start rallying, you want to be aware of, are there buying imbalances? Are they spread out? Okay. Here, right? Say you miss this trade, you're like, well, I don't know if it's strong enough. By the time you get in here, yeah, okay, the aggressive buyers are present. There's no denying that, right? And then the market rallies, from 24 all the way back up. And again, if you're looking at a chart, bar chart, you're not going to see this information on there, right? You're just basically guessing, is there aggressive buying in here? Well, I got a big green bar up. And, it's a green bar, people must be aggressively buying it here, or people got some red bars, people are selling. Yeah, well, yeah, of course, but is it market balanced or is it imbalanced, right? I mean, you had opportunity to buy here, right? Market went up a little bit, then sold off. Why did this move work better than this move, right? If you bought it here, you probably got stopped out. But if you bought it in here, you had the first leg up, you pull back a little bit, you got a nice second leg all the way back up, another 10 points here. But you really want to be watching what's happening in the market. So remember, trading the market is not just about watching price movement. There are many different moving parts to the market, right? Are there imbalances? What's happening in point of control, delta? You have to be using them. And looking at price go up or down is not really giving you a full story. You can't survive trading a single market perspective. And what that means is you can't survive just trading price. Now, I know there's people out there that are successful trading price action, but they are very focused. And honestly, most traders aren't as focused as that. But why limit yourself to just price, right? There's a whole other realm of information out there that you just turn the page and you can see things that are happening that other traders aren't, right? You have to integrate that information, that market generated information, into your trading. What the aggressive traders are doing, how is the market reacting to that aggressive trading? And going back to this chart, right, what's going on down here versus down here? What makes this one so much better than this one? Well, if you look at the footprint, this is the first low here. Okay, yeah, I see one aggressive buyer here. I see two aggressive buyers. A little bit of aggressive buying, but not much. All right. That's why this move just sort of petered out and then fell over. But this move down here, the second part, all right, that's this low down here, where this was the low that started this big move up from 40s all the way up to 60s. What do we see? We're starting to see imbalances, buying imbalance, buying imbalance, then three up here. This is a stacked imbalance. You got another one down here. So you not only have a stacked imbalance, but you also got other imbalances in the bar, right? The buying imbalances are coming in. The aggressive buyers are coming into the market, right? It's easy to miss if you're just looking at imbalances, right? Because you got to be paying attention. Let software highlight it to you. Let it come in and say, hey, you know what? I've got a bar here with multiple imbalances. Now, this is a stacked imbalance, so it would show up as a stacked imbalance. I have it turned off, actually. But if you're looking at stacked imbalances, you'd see it. Okay, fine. But over here, right, another bar with multiple imbalances. So this move has got the strength that you need to go higher. So, even if, it's scary sometimes trying to buy a low, right? And I'm not trying to predict the low. I'm letting the market tell me, hey, you know what, this is the low based on the information at hand. And then it starts moving up. Maybe you want a little bit more confirmation. Bang, you get that confirmation right here with another bar with a bunch of buying imbalances. Right? This is yesterday, right? Remember, we were testing that high of the day, right? We came all the way back up to 70 and a half. Our high was 70 and three quarters. You got a bearish prominent point of control right here. And it's just like, are we going higher or are we going to come off? Okay. And again, it's like I said, it's a tough trade trying to sell a high or buy a low sometimes because, you know, you're basically standing in front of a freight train, right? If the market's been going up and you're trying to get short, market sell off a little bit, then turn around and just run you over. But if you start looking at the order flow, right, what the aggressive sellers are doing if you're at a high, then boom, right? You can see, right? If you're not noticing, if you're not really paying attention to what aggressive sellers are coming in, right? When you see it right here, 1, 2, 3 imbalances, it's a little hard to notice, right? Because the market's trading, right? And things are happening very quickly. But having software that's going to highlight, say, hey, you know what, I got a bar here, pay attention to this. Then you start looking back, say, oh, you know what, I had a bearish primary point of control here. We're up at the high of the day. I know I got resistance based on the point of control. All of a sudden now I see aggressive sellers coming in. Yeah, okay, I could get short this market, and you get short, from the 67 area, and it just sells off nicely into a quick. It's a 1 minute chart. 1, 2, 3, 4, 5 minutes, 5 points. So that's imbalances. That is points of control, volume, value. Now, what about weakness in the markets, right? How can you see areas where the market is weak, right? Would you like to know when a move up is weakening or when a move down is weakening, when that move down is losing its strength? Because when markets lose their strength, right, when moves lose their strength, that's when reversals can happen. And not only that, but in directional moves, right? Often you have directional moves, then the market sort of goes sideways, right? Then you're starting to think, well, is this move over, or are we going to put a second leg in, or are we going to reverse, right? So that is where the third part of sort of the order flow foundation comes in, and that's delta, right? When traders first come to order flow, one of their first exposures to order flow is the delta, okay? And delta is the difference between net aggressive buyers and aggressive sellers in a bar, right? But the problem is you learn about delta, but then you don't learn how to use it, okay? And what's the point is, you can probably figure it out on your own after a long time of studying the markets. But again, you find yourself going down a lot of paths that lead nowhere. Let the computer analyze this stuff for you. Let the computer analyze the order flow for you. Now, again, this was yesterday's high, what I just talked about with the bearish prominent point of control, with the multiple selling imbalances. But right here, right, just a few ticks off our high of the day, we're seeing market weakness, right? We're seeing this move up, weakening. And that's important information. So you start putting it together. Well, I got a bearish point of control. I got resistance here. I've got aggressive sellers here. And I've got weakness here, right? And weakness is the aggressive buying has weakened to a point where the aggressive buyers just aren't active that much anymore, right? And when you remove that buying pressure from a market that's been going up, right, it goes up because you got more aggressive buyers and aggressive sellers, but now aggressive buyers are being removed from the market, then what do you think the market's going to do? Can it still go up? Well, yeah, there's still some potentially aggressive buyers, but when it gets weakened to a certain level, the market's not going to sustain that move anymore, right? And what's the next step? Well, the next step is if you remove those buyers, the move up isn't going to be very strong. The market's just going to naturally collapse on its own. I want to say collapse, but go down on its own. Okay, so that's important as a trader to understand where those levels are. And again, if you're just looking at a normal bar chart, you can't see. All right, you can't see that this move has weakened. You can't see the resistance up here in the point of control. You can't see the aggressive sellers coming in there. Right, you're just left to guessing it. You just say, well, oh, this looks bullish actually, because what you have happened here is you hit the high, you sold off, you probed down here, then you start coming up. You got a big aggressive bar up, right? Then you start trading higher. Think, oh, this is it. We're breaking out. We're going to hit new highs, new all-time highs, and go higher. But if you're looking at the order flow, what's happening in here, it's actually very bearish, right? You got market weakness, you got a bearish prominent point of control telling you there's resistance up here. Obviously, you got the multiple imbalances here, and we sold off. Where are we trading now? I don't know, I don't have my chart open, but where are we trading? This morning we're trading in the 20s. It's 50 points lower. What about this low here? Okay, this was yesterday, right? All the way, 11:30, we hit this low at 53, then we rally up all the way back up into the 70, not 70s, but to the 60s. Okay, well, why? Because on that move down, this move down was weakening, all right? Wouldn't you like to know that, hey, you know what, we have this sharp sell-off, but as we're just putting in these newer lows, it's getting weaker, right? And once you remove those sellers from the market, once that selling pressure is alleviated, what's the natural order of the market to do? Well, it's to go back up, right? So you got that strong selling down in here, but it's turned and went higher. Why? Is because that selling pressure has been taken out of the market. It's gone. It's exhausted itself. It's sort of run through its course, right? And that's where having software that's going to highlight it to you, that's this blue up arrow, is going to help you as a trader. Now, what it does, how it works is by reading the delta, right? Is delta getting weaker, right? As you're going down, right? Is the delta weakening? If you're looking at a normal bar chart, you don't even know what delta is because you don't even have access to the delta information on a normal bar chart. But if you're looking at order flow, the transactions that go through, you could see the delta, right? You could see it weakening here. It's 9, positive 9, positive 5, minus 400. Okay, that's strong, but then minus 300, then minus 81, right? It's weakened, right? Where's the strong selling? Here you got some strong selling. Here you got some strong selling. These two bars, you got nothing. Basically, delta's at 0, 9, and 5. That's basically nothing. Here's 81, right? So the selling for this move to happen, continue going down, you need a strong aggressive selling. Then instead you see strong aggressive buying to the upside, 500 delta, 786 delta, right? Crude oil yesterday, right? We had that nice big sell-off here, right? At 8 o'clock, right? But you want to have some sort of clue earlier, preferably here, but if not here, maybe even higher up here, right? Because we have the swing high around, what is that, about 713 yesterday, 715. We came off, right? This is that area right here, 7:15 in the morning yesterday. This is this right in here, okay? But you can see this market weakness, right? The market had been sort of trending a little bit higher. You got a high here, then you got a higher low, higher high, higher low, higher high, right? That's your wave analysis, right? You're putting in higher highs, but at this higher high, you see weakness come into the market, right? That's not what you want to see at a higher high, right? For the market to go higher, you want to see strong buying, right? But you can just see how this delta is very weak. You're coming up here, you got negative delta, you're sort of working your way higher, negative delta. Then even the delta that you're coming into these highs, yeah, it's 38, okay, 16, 12. That's nothing as you're coming into this higher high. And at this point you're trading what, 64.70, 64.68, right? And then what happens? It's right here, right? Boom, market sells off from the 64, 65 area all the way down to 45 area. It does pull back a little bit before it drops. Now again, I'm not saying you could have caught this drop, but this move right here, this 20 cents, is an easy trade to take. Ultra bonds, okay, great contract to trade. If you're not familiar with ultra bonds, UB is the symbol. But what's happened here, right? You start putting these pieces together that I was just explaining, a point of control that matters, prominent bearish, prominent point of control, multiple imbalances, market weakness, right? And then the market sells off, right? This was ultra bonds as well, right? You come into a swing low, you don't have any prominent point of control, but now you're getting multiple buying imbalances. And then you're starting to see the market weakness in the sense, now it's a little confusing for people when you hear the term market weakness and you're looking to buy. What it is the selling weakness. The selling is getting weaker, right? And as you're coming off that high, putting in a swing low, starting to see the aggressive buying, but as well of the aggressive buying in here with the imbalances, that aggressive selling that you had seen earlier is gone, right? That's your weakness, right? Now it's a bullish signal. That's why there's that blue arrow. Soybeans, right? Yesterday, right? We're coming off. You got your first sign here. Okay, market just goes sideways, and then boom, the bar that has market weakness, right? Telling you the selling has um, basically over sort of played its hand. Then you got in that same bar, you've got multiple buying imbalances, right? And then the market works its way back up. E-mini 5 minute chart again yesterday. This was that one, right? This was the bearish EVA in this bar here. And you got your pin bar here. But you can see as this move is happening, the selling is getting weaker, right? It's 1100 strong negative, 1600 strong negative, then 300 negative, then again another minus 306, right? It's also negative delta, but it's not strong, right? And people say, well, and then you see even in this bar, it turns up. People are going to be scratching their head. I got negative delta, but I got a green candle, right? Shouldn't it be a positive delta, right? It's a green candle. Well, not necessarily, right? In this bar, there's some strong volume on the bid side, so there was some support to absorb that selling that came in there. So even though you have a green candle with negative delta, that's often a sign of absorption. And that absorption is also measured in the weakness because as the market's coming down, if you have somebody absorbing that selling, well, if you know about absorption, right, people are selling into those buyers. And finally, all those sellers are pretty much done. They're removed from the market. And once those sellers are removed, what happened, right? The market went back up. Again, E-mini 5 minutes yesterday, or sorry, the 15th, Monday. The market just sort of going sideways, not really putting in direction. And then what happens? As you're going sideways, the sellers just basically, you know what? We're fed up. We've been selling it, and we can't get the market to move. Now they're done, right? They got no more bullets left, right? And then you got the weakness in the sellers, which turns into bullish for the buyers, and the market put in a nice 15-point rally, right? E-minis again, yes, also on Monday, right? You can see it here. We just sort of open up, cash open, and just sort of go sideways, but you're not seeing that aggressive buying anymore right after the open, right? Monday was kind of a tricky day. Um, you get these bars that just sort of, they're not doji, they're not bars that you open and close at the same level. But, you got nice ranges, but and the market's looking for its direction, okay? But what it's telling you is, we just opened up, we got buying and selling, but now that aggressive buying is just sort of dried up, right? It's done, right? The algos sort of ran through their orders that they had to fill on the cash open, and now that buying pressure has been removed, and you can see the market just trades down about 10 points. Now, what's interesting is you can adjust the strength of the weakness levels that you're looking at. So you can see it happening a little bit early. Now, if you adjust it to not a weaker level, but a less stronger level than sort of the default, you're going to get a lot more signals. But it's important, especially on moves that are happening. Okay. I mean, is there a difference between getting short off this bar or this one? Probably not in the grand scheme of things, but where adjusting the strength can help you is in directional moves, right? A move up that sort of just stalls and goes sideways. But, on a move up, why does the market often stall and go sideways is because you could have profit taking. People that were long earlier are getting out here. Okay, fine. They get out. That doesn't mean the move is over because there's still buying pressure in there. It's just that little bit of selling pressure, people taking their profits. Once people have got out, took their profits, oftentimes you're going to see the move continue back up, right? And what's interesting in this move is, again, you're seeing the weakness in that selling pressure, but then you're seeing the aggressive buying come right back up. So you start putting the two pieces together, the weakening aggressive selling followed by strong aggressive buying. What do you think the market's going to do, right? It's going to keep going up. Now, being a trader is about understanding what's happening in the market, right? It's not about necessarily buying every single um, blue arrow or bar with multiple imbalance, right? You want to put it in context with what's happening in the market, right? Like you have to think, I know some people don't want to, and fine, I can respect that. They want to have, you know, computer automate everything. Well, honestly, if that's the case, just give your money to a money manager. But if you want to trade, you know, the big money is made from making good trading decisions, right? And leaving it up to a black box, you know, isn't always the best route to go. Okay. So understanding what's happening in the markets, you know, is really going to put you ahead of everybody else out there, right? That's just relying on some red light and green light system. You know, by truly understanding, oh, I know that aggressive selling is weakening here, and I see aggressive buying is coming in. That's going to put you ahead of everybody else, right? That's your edge in the market. So imagine where you could be in your trading once you're able to put the pieces of order flows together, right? While everyone else is still thinking, does this point of control matter? What's happening in the delta? What's happening in the imbalances? You'll know, right? Instead of trying to figure it out because you got software that will tell you that, hey, you know what? This point of control matters. Hey, you know what? You've got a bar with a bunch of buying imbalances or a bar with a bunch of selling imbalances. And, you know, what's happening in Delta? Is the aggressive buying weakening? Is the aggressive selling weakening? Right? So today I showed you how to use prominent point of control, value areas, extended value areas, multiple imbalances, market weakness. And you know, these are just tools that are available in the order flows trader software. Now, again, I sort of talked a bit about how you can see it on your own by using, you know, just a plain footprint chart. I used to do that, right? I used to use a plain footprint chart to trade, and it took me a long time, right? I've been involved in trading electronic markets literally since the 90s. You know, I don't say the beginning because they had been around for um, a year or two before I left the trading floor to focus solely on the electronic markets. But you know, I've been looking at a dome for, you know, over 25 years. I've been looking at time and sales for over 25 years, and these are things that I would look for, and I've applied it to my trading, right? So again, don't just go out there and start trading every single order flow, prominent point of control, or extended value area or multiple imbalance that appears. Put it in context of the market, right? You got to read what's happening in the market and, you know, understand it, right? I mean, just like being a doctor, right? You know how to operate, you know, based on a book, right? Oh, you got to cut here and do that, but then, you know, sometimes you cut, you know, doctor cuts someplace and blood starts squirting out, right? You have to be able to adjust for that. Okay, so trade in context of the market, right? That's what being a trader is. So hopefully you've seen how order flow just blows up a normal candlestick chart, right? What attracted to me to order flow years ago was being able to understand who's in control of the market, to be in sync with the market, to know why the market stops and reverses. And again, what I showed you can be done by just by looking at any footprint chart, but you need to know what to look for and when to look for it, where to look for it in the chart. You know, are you at highs or lows, or are you in a move? And honestly, when the market's moving, especially how it is recently, on days where the market's down hard, it's easy to overlook things and miss, right? Let the software do the heavy lifting for you. Let it show you things in the order flow like market weakness, right? So you can concentrate more on managing the trade than trying to think, should I even take this trade? And again, you know, order flow is about understanding what the traders are doing in the market, what the other traders are doing in the market, right? It takes all this information from the time and sales and processes it into an easy to read format, right? Don't make trading more difficult than it needs to be, right? Again, you know, as humans, we tend to make life more difficult for ourselves than it needs to be. So hopefully, you know, this past hour or so, you'll agree that it's been time well spent. But again, I can't cover everything in a 60-minute session, right? But I got a special offer for you that you can get everything you need to know about order flow, right? If you act fast, I'm gonna give you a special deal. It's the Order Flows Trader, and it runs on NinjaTrader 8. It doesn't run on Sierra Chart, it doesn't run on TradeStation. It runs on NinjaTrader. Okay, so it will run on the free or paid version, and it's the volume footprint chart that has 17 pre-programmed order flow tools. I talked about a few today. I talked about multiple imbalances. I talked about prominent point of control. I talked about market weakness, but there's a lot of other tools, right? There's obviously the value area, the extended value area, there is market sweep detector, there's imbalance reversals, there's a new thing that we have is called order flow sequencing. Um, and there's inverse imbalance, there's zero prints, there's market exhaustion. There's a lot of different tools. And it's very easy to set up. It takes about 2 minutes to set up. There's no need for fancy templates or anything. And normally the price is $8.99. Okay. And imagine it's like taking everything that I know about trading with order flow and put it into a program so that you'll see what the institutional traders are doing in the market. And I can say that because I was an institutional trader for close to 2 decades, right? And that's important because I see a lot of people teaching order flow and stuff like that they've never sat on a trading desk, right? They got into trading and then they started learning about order flow either from me or from other people and like, oh, you know what? I'm going to start teaching order flow when they've never put in the time to really bang away at the market in the sense of understanding order flow. They're just basically taking things and regurgitating it. But I realize that having order flow is one thing, having software is one thing. You need to know how to use it. So I don't give you software and say, here you go, figure it out, because that's how it used to be, right? Honestly, it used to be you'd buy software for how many thousands of dollars, and then it's just like, here it is, go figure it out. And then you're sitting there scratching your head trying to make sense of it. And I don't like that, right? Even for me, like when I buy software, I don't want to spend a lot of time trying to figure it out, on how to use it effectively, right? And also, I mean, people today, we got less patience, it seems. So that's why I provide a lot of education on how to trade with order flow. So you don't have to keep spending time and say, oh, is this important? Is that important? I'm going to give you my order flow trading course for free. It's 15 hours of video instruction. Now, a lot of people have taken this course and pirated it, copied it, and said, oh, look, I'm an order flow trader now. And basically they teach you the same thing in the course, but I'm the one that created the course, right? It's, I sell this for $297 on my website. You're going to get it today for free. Okay. But also I have a few years ago, more than a few years ago, I created an inner circle for people that really wanted to um, understand order flow more deeply. Okay. I created this inner circle and I've extracted the videos from it, right? There's 56 videos that you're going to get access to. And normally I sell just that video portion of it for $497. Okay. And it's advanced order flow tricks. I don't like to call it tricks, but tips and analysis. Okay. So you're going to get the course, you're going to get this inner circle video series, right? Plus the software. And already that's almost $1,700. But again, you can spend all the time you want trying to learn from videos, reading books. I also have a weekly live group training session, okay, where you could come in and ask me questions. I'll talk about interesting things I saw in the order flow. Like um, yesterday, there was some nice big volume in the market, at a particular level, and I talk about why that was important. And it's an area where you could come in and you know, listen, right? Ask questions about anything, right? About the software, saying, "Oh, Mike, I don't understand what the function, what this indicator is about, right? Mark order flow sequencing." Well, I'll explain it to you, but it's a resource out there that you can go. Now, the slide says there's 92. There's actually over 111, 113 episodes. I've been doing this for over 2 years already, right? And if you can't attend, again, it's every Tuesday night at 7 p.m. It runs for about an hour or so, but again, you're welcome to come in and join, or if you can't join, you'll get access to the replay, so you can watch it at your own pace. But it's a great resource. Again, say you're trying to reach me over email or something and you couldn't reach me, you can reach me there. I'm always there because it's just me in the room with everybody that wants to come in, right? So, and it's just for our users, so you're able to ask anything you want, right? Next week I'll be talking about cumulative delta, right? And how to read cumulative delta and be useful about it, right? And it's again, it's a place that if you're struggling with your trading or struggling trying to understand order flow, for you to come in and ask questions, right? I don't do one-to-one anymore. Um, I've offered it in the past, like one-to-one mentoring, but honestly, it's quite expensive. But I wanted to have something where people could come in and sort of interact and ask questions, and reach out to me for whatever reason. Okay. Now, of course, I'm still available over emails. You can always send me questions over emails, but I'm there and you'll get an answer instantly for the most part, unless it's a very complex question that would take me an hour. I have to either email you an answer or do a cover it on the next session. But other software companies, they want to charge you for that, right? They say, oh, yeah, here's our software. And then a week later, while you're still trying to figure it out, you get another email. Oh, we're having a boot camp for $9.99. Learn how to use our software effectively. Well, for what? I just bought your software. Now you're charging me on how to use it. How to learn how to use it. For what? That's ridiculous. Um, Again, some people charge $200 a month for a room just like this. They'll say, oh, join our club, and $299, $199 a month, recurring forever that you can't cancel. And it's only one session a week, maybe two sessions a month. For what? Here it's for free. You get access to that. So you start adding it all up, and it gets, it's close to $2,000, but you're not going to pay that, right? It's just going to be a one-time payment of $749. Now I'll be honest with you, this price is going up the end of this week. It's not going to be $749. It's going up. We've kept it down we try to keep it down as long as possible, but it's going up. And just go to orderflows.com/oft3. There's no recurring payments. I hate that. I see software out there. There's some software I do want to buy sometimes, and it's on this recurring model. You sign up for it. You think, wow, $79 a month, $99 a month. Ah, that's nothing. Then you go in later, you don't like it, you want to cancel it. You can't. You think you canceled it, then you're still getting charged. You even close the charge, the credit card that you have, and then you're still getting charged somehow because it's somehow linked to your bank account. That's so frustrating. I hate that. That's why we just have a one-time payment of $749. Now you're still going to need to pay your data fees. Obviously, you don't need level 2, you just need level 1. If you have a brokerage account, you can get it at pretty inexpensive prices. And obviously, if you're going to use the paid version of NinjaTrader, you got to pay for that. But this will run on the free version of NinjaTrader. So if you're using another system for your order entry, you can just get the free version of NinjaTrader, get some quotes fed into it, and run my software on it. So again, what other people are saying about the software, it's remarkably helpful, Sheila writes, because she can clearly see what's happening in the market, right? That's what you want, right? You want to be able to understand what's happening in the market. So what you do is you go to orderflows.com/off3. It's in the chat box there, okay? Scroll down the page. Now you can watch the video and read the charts and all that, but you get started, just click this button that says click here. That's going to get you started. Takes you to PayPal. PayPal processes your payment. I don't get your credit card information. I don't want that. It's done through PayPal. And after buying it, go check your email, right? It'll take some time for PayPal to process it, and generate the license tokens and things like that, and course logins. But it's going to be sent to your PayPal email address. So again, it's just a one-time payment of $749. So go to orderflows.com/off3.html. So you got to ask yourself, right? Imagine, last year is about the time that we started all these lockdowns around the world, right? Where are you now in your trading versus where you are a year ago? You're still in the same spot, right? You can stay where you are and go nowhere, right? By doing nothing. Or you can take some of what you've learned today and go out there and try and apply it on your own. Okay, there's nothing wrong with that. It could work. Trial and error for the next few months, and perhaps if you're lucky, you start to see some positive results. You may not realize that you're putting the cart before the horse, so to speak, instead of behind the horse. But the next option is to take action, right? Put the ball in the back of the net, right? You can let me take your hand and walk you step by step through each part of the process. Skip that trial and error, right? If you do the work, again, remember, trading, being a successful trader does involve work. Any line of business, any profession, you got to put in effort, right? Things just don't magically fall into your lap. Yeah, sure, you hear stories of that happening to people, but those are rare, right? In general, you got to put in some effort, right, to see some results. So figure out what motivates you, right? Maybe you want freedom to do what you want, freedom to go where you want, freedom to do nothing in life. You sort of just sit back and chill out when you want to chill out, right? For me, trading has given me that freedom. This past summer, my wife and I were just talking like, hey, you know what? Let's get out of here, right? We're in Illinois. It's all these lockdowns. Let's go out west, right? You go look at VRBO. Found a nice cabin out in South Dakota. We rented it for, almost a week. We just stayed out in South Dakota, saw, was at Devil's Peak. We saw Mount Rushmore. We saw all this stuff, all these dinosaur dig sites for the kids, because trading gives me that freedom, right? Say, you know what? I want to take a break. I don't have to go write an email to my boss. Oh, can I request this time off? And then the boss, well, we're kind of short staffed, no, and things like that, right? Trading gives you that freedom to do what you want when you want, right? That you just can't get sometimes in a lot of other places. Now, I got a special bonus for you guys. It's the order flow playbook. And this is a course I did, and it's got about 11, I think 10 or 11 trade setups based on the order flow. Okay, so I'm going to give you access to that for free, and I sell it right for $297. I mean, you can look on the website, go to orderflows.com/playbook.html. You can see the page, it's $297. I'm going to give you that for free also. So you got a lot of ways to learn order flow, plus a live weekly group session, right? You can come in and ask your questions, but you got to get started, right? You got to go to orderflows.com/off3.html. If you don't get started, you're not going to see any results. So again, what you're going to get the Order Flows Trader 3.0, which is the current version. You're going to get the Order Flows Trading course. You're going to get the Order Flow Inner Circle video series. You're going to get access to live weekly group training, and you'll get the access to the Order Flow playbook, right? And again, you're going to get all of that for just $749. So at the beginning, I told you about my book. If you want my book on order flow, just go to orderflows.com/book.html. Make sure you put the .html at the end, and it takes you to this page. Just enter your email and your name, click submit, and it takes you to the download page. Okay, you go to this page by itself, orderflows.com/book. It's not available on that page. You have to go through that process. So again, get started now. Go to orderflows.com/oft3.html. I see that Anna's already put the link in the chat for you guys. I'll tell you what, I'm going to put the link in there for the book. If you just give me a second as well, so that you can get started, right? And again, that's the main point in life is about getting started. So, I'll just go through. I got a little bit of time to go through some questions. What is this here? How is the bearish? Let me see here. Can order flow be applied to longer swing trading time frames? And again, you're dealing with order flow, right? And it's based on what's happening right now in the markets. And if you could use it for trade entry, right? But you still at the same time, you got to be managing the trade. And the best way to manage the trade is based on what's happening in the order flow, right? So if you're long and things turn bearish in the order flow, well, chances are the trade's not going to be very effective much longer. Yes, there will be a replay for this. And another question I get often is, does it work with Forex? Does it work with stocks? I'm a futures guy. I've been in Chicago, right? It's all the futures exchanges. Yeah, you can use it with stocks, but again, you have to be trading stocks that are liquid, right? That trade decent volume. So because again, you're dealing with volume, so you want to have decent volume. Pac-Man says, what's the link for the book? It's in the chat, but just go to orderflows.com. Here, I'll put the link back up here. Here, orderflows.com/book.html. Larry asks, would like to review this in Traders World magazine. Yeah. Send me an email, Larry, about that. Now, a question that I get is, I've got a lot of tools because there's sort of a question in here about linking it with Strategy Builder in NinjaTrader. A lot of these tools, they're not by themselves, right? I have other indicators based on order flow, right? That really is everything step required in it. Now, sort of these tools, right? These pre-programmed tools in it's in there, Harry. The tools that you see in the software, right? They're there to highlight specific actions in the order flow, right? Because as a trader, right, you want to know when something is bullish or bearish, and then you still got to put the pieces in people say, well, it's not really automated. Well, it's not meant to be automated, right? It's to help you understand what's happening in the order flow. So that's, I don't really like to automate things to the sense that, I just turn on the computer and walk away. As a trader, you have to trade, right? But this is to help you understand what's happening in the order flow as opposed to just giving you the volume numbers, right? It's saying, hey, you know what? This volume is bearish or this volume is bullish, or hey, you know what? You have this series of imbalances, it's bullish, right? Because, it's easy to miss things in in the market, right? Especially when a market's moving fast, especially if you're trading, NASDAQ or MNQ, even ES at times it moves very fast, right? You want to have things that's going to help you process the information. Now, Harry, it's not in the chat. The email is, sorry, the book is, you have to go to this page, orderflows.com/book.html, and then you have to enter your name and your email address. So anyway, I'll end it there. Again, Larry, send me an email about Traders World. And again, if you guys got any questions, you can send me an email. My email is real simple. It's just mike@orderflows.com. So I'll end it there. Thanks, Anna, for having me. And you know what, everybody, enjoy the rest of your day wherever you are. I'm in Chicago, and it seems like winter is coming back, even though it's first day of spring is in a few days. So have a great week, everybody, and thanks for attending. Bye-bye.